Alright, so if you do not trade ICT, I feel like ICT can be a very good way to increase your confluence on your trades, okay? Even if you use the traditional methods of trading, for example, the trend line. Trendline is quite a wonderful concept, okay? It's quite a wonderful concept. I've used it before, I do not use it anymore, but a way that you can use to get entry confirmation on your trend line trades is what I want to share with you today. So just a few things that you can put into your trading that would make it a little bit how do I put this, more interesting or more accurate. Yes, that's the word I'm looking for. So for example, this downward move here, okay, so there are a few things I would like you to impute, okay, moving forward, using trend line, breaks and retest, right? So the first thing is that you can use the mitigation block and the breakout block. So instead of just looking at when it touches the trend line, look for the mitigation block or the breakout block in the previous range. For this one, you can see that price came down in here to mitigate this other block right here, okay? So we did not sweep the lows, and then we went higher, and now we're coming down to retest the trend line. So our mitigation block simply will be right here in this area, okay? So if you use the mitigation block, use maybe ICT PDRAs as part of the things that make up your confluence, then you will find way more accuracy with your trades. Okay, so this is price coming straight into the mitigation block, which is this 1 2 3, these three candles, and price taps with very little drawdown and goes higher. Another thing that you might want to employ is to think about how price generally makes a run from a certain level, okay? How price generally uses makes use of certain levels, okay? So if price is about to run from an area, it's either going to do that as a turtle soup, or it's going to do something called a failure swing. All right, so it's, what does it mean? A breaker kind of situation is going to look like this. The price is coming down and it breaks below a low and then explodes higher. Okay, this is the first way that price usually turns. Okay, very lucrative, because you can buy here, you can buy here as well. And the second way that price usually turns is that it's just gonna go down there and then start moving higher. So once it's here, you wouldn't know that okay, this trend has changed, but once it goes above again, you'd know, and then you'll be buying around here. Okay, so you can anticipate one of these kind of formations on the chart before you enter. So let's say the price has hit this mitigation block or just touched the trend line. Let's say you still want to use the trend line and you don't understand what the mitigation block or breakout block is. So price touches down on the trend line, you can wait for this format or this pattern to form, either the breakout pattern or this failure swing. Price gets in there and moves away. So here you can see that this is a breaker scenario. The price consolidates, it stays in a tight range, it doesn't go and touch the trend line, yet it just teases every participant, okay, and then finally drops, then rejects from there, okay. So later on it's going to come back to test this area right here, okay, usually the breaker block, okay. In this case, this is the breaker block, this candle here, okay, that's the breaker block there, and you can see price testing it there and exploding higher. And that would make bring me to the end of this video. Just thought to share this little tips that could help you increase the accuracy and probably the risk reward ratio of your trend line, break and retest trades. and I hope this helps you out in your trading. I'll see you in the next video.